Welcome to the Sip and Synergy podcast, hosted by Annabella Stoic, real estate agent with eXp Realty, and
Joyce and Annabella, mortgage agent with Centum Financial Services, LP.
Hello, welcome to Sip and Synergy. Yes, it's been a while. You know, life gets busy. But I'm Annabella, and
I'm Joyce.
And let's get started. Today we're going to talk about properties, unique properties, and how to finance them. There are a lot of different types out there, folks, of properties, and some of them are easy to finance and others are not. Right, Joyce?
Absolutely. It's all about, how unique, where are they located? And I think that today we're going to specifically kind of pinpoint waterfront locations.
Yep, that's the first one. That's the first type we're going to talk about today. So what I can tell you about waterfront is there's a lot of what I call idiosyncrasies with different types of properties. Waterfront in particular, you have to be aware of the zoning. Is it 4-season, 3-season? Does it have year-round access? Is it on a 3-season road? There's a lot of things you need to consider when buying a waterfront property. Is it winterized? What is his water source? What kind of septic system does it have? I mean, I could do a whole podcast on this. I don't know. What do you think?
Oh, yeah. And lenders sometimes do have factors when looking at these unique properties in terms of, the appraisals, what lenders look at as high risk compared to primary, year-round, and seasonals. Like, these are definitely the idiosyncrasies you speak of are very high in terms of the lender requirements as well. But strictly qualifying standards, they're typically looking at more
more of a down payment.
More of a down payment. Yeah.
Mm-hmm. Okay. Fair enough. Now the other things we need to look at when we're looking at waterfront properties is like, what kind of waterfront? Is it environmentally protected? Now, how does that affect financing, Joyce?
Environmentally protected. These are definitely the harder ones. You're fighting. Oh gosh, when you're doing anything that involves the conservations and there's a lot more hurdles, a lot more tricks that some lenders will have, up their sleeves. But ultimately, you need to get that all done on paper.
Yeah, and you should do your due diligence up front. Make sure that the property,
the inspections,
yep. Make sure it's going to be okay for your intended use. Do you want to go there in the middle of the winter? Okay, you want to go in the winter. What is the road like in the middle of the winter? What is your shoreline like in the winter? These are all important questions, and I can tell you, I can talk for hours and hours, and perhaps you can reach out to me and get the waterfront buying guide, because that's what I have for that.
Very smart to have. You know what? Annabella's got a point there. Seek out those that are really, knowledgeable and versed in dealing with waterfront. Because when you don't know that this property, it may be a beautiful property, serene, perfect. You can envision your family being there. But did you know that it was, a flood hazard? Do we have a flood? Is it a flood zone?
Is it in the floodplain? Can you build? Do you own your shoreline? These are all things that you have to dig into, and ultimately can affect your financing. Because if it's in the floodplain, let me tell you, I'm sure a lender's not going to like that.
Nope, nobody's going to want to touch that.
Yeah, exactly. Any other little tips and tricks for waterfront, Joyce?
Let's see. Oh, just do your due diligence always in buying any property. You want to make sure that, are you prepared? Are you prepared to really love this home to put down such a higher down payment?
Okay, here's another thing I just thought of. What about capital gains? Speak to me about capital gains and primary versus secondary residences. I'm sure you're very versed in this, Joyce.
Did you want my personal opinion?
I don't know. Are you going to scare people off? Then I'm going to run out of business.
Okay, well, listen.
Hey, we want to be honest.
Reach out and talk to me, because if anyone knows more about owning property and dealing with capital gains, it's me. Many properties, how you have to, let's talk about primary and secondary. If it is your primary home that you are selling and you have a secondary property, is this a seasonal property? Is it
your primary
residence? Do you still classify it as? Have you changed the primary residence to a secondary residence and now you're royally dealing with a higher capital gain cost?
Especially if you're trying to sell. Yeah, it really comes down to selling, right? And having to pay capital gains. But again, another thing you need to keep in mind with waterfront, and we can go on and on and on for hours.
Yeah.
And we have a few more types to go through here.
I really like waterfront. Am I being biased though?
Yeah, same here. I have one too.
But
we wanted to have the serenity thing,
right?
And peace and quiet,
breathtaking views and serenity. Serenity now, please. So,
Joyce, you have another kind of concept that you want to talk about with regards to waterfront properties.
Well, Annabella, you know I have this wellness little bone in my body.
Yes,
and I must say the health and wellness benefit to having waterfront property is the reduced stress levels. They call it the blue mind effect, I read. So I thought it was really cool. It's linked to reduce stress levels, improve mental clarity, and get a better sleep. So,
well, when we all want more sleep. But I can tell you, I mean, it's just like here it is from my perspective. I bought waterfront because I wanted to get away from the city. I was stressed 24/7. Everywhere I went, stress. I could not get away from it. I couldn't relax at home, nothing, because there was traffic, there was crowds and lineups and angry people. I was done with it. So that's why I moved to waterfront. What about you, Joyce?
I'll tell you, I moved to waterfront, and my personal experience with moving to waterfront, I wanted to get away from the city as well. I wanted to get that serene, peaceful environment for my family. And I'll tell you, it is more of dealing with the emotional well-being for me. And I too dealt with the whole lender situation, because I'll tell you, my lender came back and said, we won't mortgage a waterfront property 1 week before closing.
Oh my goodness. Why did they do that? What was the reason?
Waterfront properties, especially in the areas that they're in, they'll look at the residential, I guess, the comparisons and stuff like that, and
the risk involved.
And
it was your secondary at the time.
And it was the secondary at the time.
Yeah.
So there was a big thing there. Not to say that I wasn't able to do it, because we got it done.
Well, of course you did.
We got it done. We got the lenders. We got the lenders to do it. But we'll just say it is beautiful, and it is something to really work for. And at the end, you will be happy.
Exactly.
If you find that waterfront home, don't be discouraged in trying to find financing for it, because there is always a lender that will be able to do the financing for you.
Great. Good to hear. Okay, Joyce, we've got a challenge for you here.
Okay.
We are now going to try and finance off-grid, modular, or tiny homes. Oh my goodness.
Are we talking like those CCAN things?
Well, it could be a CCAN. They convert them to homes these days, apparently.
I know.
So from a real estate standpoint, there is a movement right now to find more affordable homes. People are really struggling to get into the real estate market. So a lot of municipalities are looking at alternatives. They're looking at tiny homes, modular homes, mobile homes, CCANs, that type of thing. Okay. And also accessory additional units on the same lot.
Right.
Years ago, they would never approve any of these
No.
as a residential dwelling.
Mhm.
But just for example, Belleville just approved a bylaw where you can have multiple residences on one lot.
Isn't that similar to what they did in Toronto?
Yeah, similar. And now tiny homes, I'm hearing through the grapevine, are starting to become approved as a residential home, like a little granny suite on your lot.
Yeah.
It's fantastic.
It's beautiful.
It's solving a whole bunch of problems.
It is.
But what I can tell you from a real estate standpoint, some of these are not going to gain a lot of equity, I will tell you, because it's not very permanent, quote unquote.
Right.
A CCAN that's been converted to a major home, if it's on a foundation. But,
right.
If you've converted it with a foundation, I believe is where it starts becoming easier and easier to finance, and you'll gain more equity. If it's still in a temporary kind of format, that's where it starts to become issues. Now, off-grid, what's the problem with that? Well, usually they're 3-season, one.
Mm-hmm.
Two, there's very little road access.
Very little. Yep.
At least not year-round to these off-grid homes. And lenders don't like them. So how can you talk to that, Joyce?
No, lenders don't like them. There is a big challenge and how to overcome them. There is some lender flexibility. Rural and acreage lenders are probably the way to go for these. These are lenders that are specialized in rural properties that do have a significant acreage.
Mm-hmm.
And from there, based on, like you said, whether it's on a
permanent
foundation. Structured drawings. Again, we're going to do appraisals, property appraisals, based on the acreage.
Mm-hmm.
And septic systems are definitely something that will need a reliable source. We're talking
not man-made.
Proper. No.
What do you mean? Don't you want to DIY your septic system?
Oh yeah. Oh,
don't kid yourself.
Imagine.
Don't kid yourself. I've seen it.
Our environmental friends are.
You would not like that.
No, their ears are really hurting right now. So let's troll it back a little bit. We are definitely not going to entertain and DIY any man-made septic systems, but a reliable source for water, a reliable source, and a proper septic system,
proper well,
mortgage, and some lenders will consider these. So,
but they're more like rural and acreage like land lenders.
Yes.
So not typically A or B lenders. Is that what you're saying?
Yeah, we're looking more like private lenders. Credit unions are more
like
often
a credit line situation.
Yeah.
Oh yeah, or borrowing on an equity of your
on an equity of a home or an existing property of sort. Some owners successfully use these lines of credits and pay it down like a mortgage. I mean, line of credits are great to have too.
Mm-hmm.
And if you can't, again, don't be discouraged. There are financing options for, and I've seen it. Trust me, I've seen it. People that have not had much income or
credit
issues, like we're talking below the 650s, like, it's hard times and we understand. And there are lenders, again, every unique situation coming with a unique property.
So let me ask you, with this affordability housing crisis that we're having right now, are lenders opening up their pockets a little more these days, or are they becoming stricter? What's your viewpoint on that?
They're becoming more stricter.
Stricter, even though we're having affordability issues and housing issues, and they're stricter.
However, there are still options.
Oh, okay.
There are still options. There are, B2B lenders. There are private lenders. There are some institutional lenders that are still willing to work with you. But it is becoming harder. They are requiring more paperwork. They're requiring a lot more paperwork.
A higher down payment.
And
they're going to give you a higher
property
interest.
Appraisals. We're dealing with a lot more than just, and it may not be a quick, so start looking into this way before. Like, if you are wanting to buy a tiny home or buy property in acreage and build a tiny home on it, I would start doing that.
Do the homework
months
now.
in advance. It takes more than 2 months to secure any kind of a deal if you're looking at these kind of a home.
Doesn't it go back to one of our original podcasts, Do the Prep?
Yeah.
Prep.
Do your prep. I love it.
Take a drink to that.
Take a drink. Cheers to you.
Cheers. All right.
This Fresca is delicious.
Okay, well, we've been talking about, off-grid homes and having to start on vacant land. Now, vacant land, also, you need that first before you can actually build a fully detached residential home. We're not talking a tiny home. We're talking a mansion.
We're talking home.
We're talking a home here.
This like is home on the range home.
Exactly. We're not talking anything temporary. This is a permanent structure. We're going the 9. We're doing a mansion. We're doing the things.
Yep.
So what do you need first? My guess, if it were me, we need the land first, obviously.
Sure, you're going to go and scout out your piece of land. What do you want to buy?
You got to do the prep and get all your financing in order for the land, but isn't there a construction loan of some sort that you're going to need to get? Why don't you speak to that, Joyce?
Sure. Let's talk about that. New builds, new build on vacant land. You will need a larger down payment. It's typically 20 to 50% for the land alone. And then you need a separate construction loan or a builder's mortgage. Depends on the finances that will require to.
So you're getting an approval twice.
Correct.
And then you have to do, isn't there like stages where you have to get an inspection, then go?
Yes. It's a lot longer.
Yeah. What is the percentage that the lender needs to say that you're done with the house? Isn't it like 95%?
About 85 to 90% done.
And then you get your last installment or something like that?
The last installment gets sent. Yeah.
So how does that work?
Are we talking about the land mortgage first?
No, we're talking about
construction loan.
Yeah. How does that work?
So financing the build itself.
Yes.
So, okay. Larger portion of that. So first of all, you need to prove that you have the funds for the construction stages, which is what we're talking about. So the lender will only release them in the stages, and it's based on the project milestones. Once you get to that milestone and all that requires approved plans. You don't have a detailed construction plan, you don't have permits, and then you're not going to present this to the lender. You definitely are presenting this to the lender. They want to see all this, right? And then
so they want to see the plans up front before they approve you is kind of what you're saying.
Absolutely. So that entire project, those drawings, those huge pages of drawings that you'll see. And again, you want that the experience, like who is leading this project.
And the builder, they want to see what builder you're going to use, do they not? Yeah, because they want to know. Be a reputable builder.
Yeah, we're not talking about, some Joe Schmo
DIY,
right? we want some lenders want to know upfront the drawing, the schedules. What are you sending to these builders?
So riddle me this, Joyce. First time home buyers. What is the new thing that just came out for new builds? Oh
my goodness!
For first time home buyers.
Cash.
No, there's a new program out by the government.
I saw it. I did see it. Did I read it entirely? I haven't dealt with a lot of new buyers lately. It's been a lot more. So entice me.
Anyway, so there's a new program out where the government will approve first-time home buyers now for a new build.
For a new build. Oh, just on a new build.
Correct.
Wow.
Up to $1 million, I think it is.
Do you know why? Is it because a lot of these first-time buyers are wanting to get out of the city and buy and build, or they're getting money from maybe families that are selling their homes. They've got some capital now and they want to take that and invest it.
Well, and they're getting it from their parents or whomever, right? But getting a new build, it's nothing to be discouraged. In fact, I would encourage everybody to look at it.
To get a new build? Yeah.
Well, I mean, at least consider it. And the reason why I say that is you get what you want. You get the design you want. You get the finishes that you want. Hey, and if a first-time home buyer can now get new builds, why not?
Actually, you know what? I wouldn't have minded a new build.
Same here. Like, I don't want to do all this work.
When you think of all the money that I've spent renovating a home,
I know.
especially my own home.
Oh my God, I can't even tell you how much money I've already spent on mine. And I should have just got a new build. I'll tell you right now.
In the words of my husband, you like the bones, eh? And I keep telling him, I love the bones. I love the bones of this house. The bones are the strong bones. And he keeps telling me the bones, eh? The bones. I could have built you 2 houses.
Exactly. In my case, probably 4 at the amount I've spent. But, okay. What about the Terrian warranty?
Ooh, I've heard a lot about this. One of my clients had to deal with something like this recently. The Terrian warranty with regards to these homes. Back in the day, I remember it wasn't the greatest.
Oh, yeah?
Because I had many friends and family that had to go through that whole new Terrian home build approval and warranty and all these things. And but I've heard that there's a lot more give these days on there.
Okay.
I was very surprised.
Wow. Well, what I'm surprised about with Terrian warranty is when I'm going through a new build with a client and we're looking at a house, I always tell them, and everybody, it's a myth.
Okay.
Everybody thinks they don't need a home inspector if they're going through a new build. But what I can tell you is, as long as the new build is Terrian warranty approved, you can get some things fixed. And almost every new home will have things to fix.
It's true. It settles it.
Exactly.
Right. Yeah, there's always something to fix.
Exactly.
But are there limitations?
Yes. Only certain things are covered.
Right.
And within a certain time period.
So would you consider this a do your due diligence in what the Terrian warranty
is going to cover
in a new build?
Exactly.
Again.
And also the builder's agreement.
Yes.
Is something that you should look at very closely as well, because that can affect your financing and it can affect your Terrian warranty potentially. You never know, right? What they're willing and not willing to do, the builder, right?
Do you think that as a realtor, that these are one of the few things that the buyers will ask your opinion about?
Yeah, I would always say look at the builder's agreement.
Yeah.
And I would always say, okay, what is Terrian going to cover?
Yes.
And then still get a home inspection because, there's always things and you wouldn't believe it, but it's there.
Oh, yes.
Now, talk to me about HST. What's the difference with HST on a new build? Do you know that?
Are you buying a home based on a company?
New builds, HST applicable. That's part of the first time.
It's all applicable.
Yeah.
HST
so you're going
has
to be
to
paying,
go on there.
So that is a con of a new build. You got to pay the HST on a new build. But
as a first-time home buyer?
No, I think they get that back.
Get that back,
That's part of the program.
Yeah.
But if you're not a first-time home buyer, you will have to pay HST.
Ding, ding.
Ding, ding. Regret to inform you. And what does that mean, Joyce, from a financing standpoint?
Oh, you got to get more money?
Yeah, you got to
get more money. Oh, but that's okay, because you know what?
You can find the money.
We can find the money. We have lots of individuals that have money. Institutions, credit unions,
creative
lenders. It's a stressful situation. Listen, the idea is get with an individual who will help you figure out these things, like for you.
Exactly.
Isn't that why we're in this profession?
Exactly. And find an individual that knows about it. Just someone that knows about new builds. Like, for example, I'll give you an example from my experience. I had someone that was looking at resales, not new builds.
Okay.
All of a sudden changed their mind, wants to look at new builds.
Okay.
What did I do so that I service my client the best? is I talked to another realtor that specializes in new builds.
Yeah.
And,
That's great.
and that is how we educated both myself and the buyer.
Yeah.
She will tell me, okay, look for this, look for this, look for this, look for this. And so
Yeah.
now I'm fairly versed in new builds. But will I consult a colleague? Always. If I am not fully versed in something, I find the info and I make sure my client has it.
Yeah, because we've all gone through experiences, and seeking out colleagues' helps are what we're here for. So this isn't a one-man show. When you're dealing with mortgage agents such as myself, the brokerage that I am with, let me tell you, the awards that and the feet that have walked on platforms receiving awards within Centum is just amazing. The team I'm on, Team Anvil, just phenomenal. The amount of knowledge and experience that comes. So why wouldn't you want that behind you in finding the financing? Take that stress away. Let us do the work for you.
Exactly.
And then give you the answers that you want. But when you're dealing with these unique properties, give yourself that time. Don't go look for a property tomorrow and want to close on it like next month. It needs a little bit of time.
Yeah, this is a big purchase of your life, right? You need to have a team.
Or sorry, not next month, but like at the end of the month kind of thing. Yeah,
exactly. But this is a big purchase in your life. One of the biggest, I would say.
Acreage.
Yeah.
We're talking acreage.
Exactly.
Big, right?
Yeah. And you don't want to just go to anyone for that information. You want to make sure you have all the information before you pull the trigger on that purchase.
Yes. And again, with the intent to build, some lenders will only approve the land loan if you plan to start building within 1 to 2 years. So you got to make sure your time period. You're planning to build within 1 to 2 years. Your minimum score is 680 for any or higher, 680 or higher, and have a decent amount of a down payment.
All right. Okay, Joyce. Now we're going to go to something really interesting. Well, at least in my mind, anyway.
Okay.
So there's a movement out there that people want to buy a farm. They want to do hobby farming. They want to have chickens. They want to have cows. They want to have the whole nine. And then most times it's a century home on these farms. Oh boy. We have lots to talk about here. So farms, they're usually on agricultural zoning, and you've got livestock. So here, I can tell you a couple of things. And again, this is probably another podcast, I would say.
Farms,
livestock, the whole nine.
Yeah.
So zoning has to be there if you want to have a hobby farm or a farm.
Yep.
You got to check the bylaws, because some people say, well, can I have chickens? Oh my goodness. Can I tell you what a brouhaha that was in one of the towns that we know of.
Yeah.
About chickens.
How many chickens? Can you have chickens?
Can you have chickens in town? This is a question I get on a regular basis. Now, first off, I would never have chickens in town. That's just me. But anyway.
Imagine your neighbor.
To each his own. Oh my. To each his own. So the zoning has to be there. You need to check the bylaws. But then you may have EP and conservation issues.
Ooh.
Why, you say? Well, a little thing called excrement drainage.
Right.
I mean, anyway. I don't even want to go there. It's so gross.
I know.
So gross.
I know.
But anyway, so there's that. I mean, there's lots to consider. How much acreage do you want? Do you need a barn? Don't you need a barn? Do you need a fence? Do you need crops? I mean, I could go on and on and on, just like waterfront properties, about farms. Now, one thing that is normally on farms are century homes. About, I would say, 7 to 8 times out of 10, don't quote me on that stat, but most of the time it's a century home.
Yes.
Because back in the day, everybody lived on farms.
Correct. Correct.
What is the issue with century farms, you say? Well, I will tell you, tons of issues with century homes. So, 1, aluminum wiring, lead pipes, lead paint, asbestos, stone foundations, water issues, like there isn't enough.
Yes.
Or they're using a cistern, an old cistern.
cisterns.
Do you want to know how many cisterns I've seen in my career so far? Unbelievable.
They scare me.
You know what? They're always in a basement, and there's cobwebs everywhere, and there's spiders, and
they're always
dirt.
got boarded up, and always look scary. I don't know. It's always, it reminds me of
those horror movies where things happen in the basements of century homes. I don't know.
Yeah.
Anywho, lots of things to consider. And I mean, the other thing I can talk to is insurance, which is going to be a later podcast, but insurance would be an issue with these properties as well. But
insurance.
So, but also financing farms and century homes is also a challenge, I would say. What do you think, Joyce?
Just as challenging as dealing with land, and just even more challenging dealing with waterfront. But a down payment, a comprehensive home inspection. I mean, you just went through a whole thing like that, and securing appropriate insurance. So you hit that nail right on the head, talking about insurance.
Well, because doesn't the lender ask for insurance?
Yep. Due to the age of the century home.
Yep.
Lenders require more than just a check on the foundation, the electrical, the plumbing, and all these to ensure that it's all safe and stable.
So this is actually a home inspection before you even buy it. The lender wants to see that.
I think that if you are the seller of a property like that,
you should have it on hand.
You're going to have it on hand. You want to have this home sold. You're definitely going to want to present them with some sort of an already inspected.
Well, it would make sense because, I mean, if the roof is about to cave in, or if the floor is about to cave in, or there's asbestos and aluminum and lead everywhere, the lender's not going to want that.
No. And I mean, realtors, they're going to walk in there going, oh, this is going to be interesting. But
it becomes a disclosure thing.
It becomes a disclosure thing. But imagine as a seller, they come to you and say, hey, here's my insurance certificate, and here's my, that's candy.
The home inspection. Oh my gosh. I'd be in my glory.
Exactly. Again, so a thorough home inspection, the electrical system, the foundation, all of these, all done first and foremost. Then talk to the mortgage agent, talk to the broker, getting you guidance for what other else that you may need. But we're talking a higher ratio mortgage, a down payment.
So it's the same thing as these other
thing. A $1.5 million home, it's 5% on the first $500,000, right?
Cool.
10% on the portion above that.
Now, what about land with that century home? So how does that work? Like, do they finance up to 10 acres and then after that it's whatever? Or how does that work? Like, does the acreage have a factor at all with financing?
Yeah, they usually do. They want to know how much how many acres are on the land in its entirety.
Mm-hmm.
I think that it was at some point, after a certain point, I think it is 10. I think
5 or 10. 5 yeah, or 10. Well, I do know from a zoning perspective, you can't farm, and different municipalities have different
depends on
things.
What you're using it for, right?
Yeah. So some say you can't farm unless you have a minimum of 10 acres or 15. Some even say 5. It just depends on the municipality, and that's where your realtor should help you. Yes. Look at the bylaws and get you the zoning permitted uses and that kind of thing.
Yeah.
But your lender's going to be asking for that too. So it's no harm done to get this up front.
Present them with all that information, what they want to know. Agriculturally speaking, some government programs are available.
Oh, did not know that.
It's a federal government program. They fund farmers. They fund cooperatives. They fund things like this. Lenders like to... What?
I had another idea.
You had an aha moment there.
I did.
I saw it in your eyes and I was like, what?
Here's my question for you, Joyce, question of the day. You are leasing, lease land is another topic for another day.
We'll get that.
When you're agriculture and you're growing crops,
mm-hmm.
you're leasing a part of it to another farmer.
Yes, you are.
So it becomes income, does it not?
It does become income.
Nice. So doesn't that
Yes.
help you with your credit
Absolutely. It's like when you own a home and you're renting out your basement and you got some kind of income coming in, but think about that on a larger scale.
Exactly.
We're talking hundreds of thousands of dollars in income coming in if you're renting parts of your land to a farmer.
But that would be something that would be kind of interesting, no? Like if you can't afford, let's say you can only afford 500,000.
Okay.
Let's say.
Okay.
But you're going to lease out your land to another farmer and you're going to be making money.
Yeah.
You can now afford potentially 7, 8, 9, depending on how much land you're leasing and what you're leasing it for.
It's true. You want to find those farmers again. So your farming is usually cyclic, right? So like they're like some payments can be made depending on to match the season.
Oh, okay.
So it depends on. So there's some of our lenders are flexible repayments to match the season that you are farming. So that put together with the Canadian Agricultural Loans Act, which is CALA, is the actual government program.
I have another question for you.
Okay.
Now, isn't there a forestry management program from the government that you can apply for? So if you manage your forest, this is I've learned this recently.
This is interesting.
If you manage your forest from a sustainable point of view, you can get some tax write-offs.
Are we talking about wetland forests as well? Do you know?
Wetland, I don't know. But I do know if you have a forest on your land, let's say you have 100 acre or more. Okay. And most of it or part of it is forest. Okay. If you manage that to a certain way that the government will dictate, yes, you get a tax write-off. Does that not help you with your?
That's a big bonus and a big plus.
Yeah, right?
In terms of lending, is that what you mean?
Yeah, doesn't that help your income?
Oh, absolutely. When you're doing your taxes at the end, that is definitely going to help your income.
Right. I just thought I would throw that in there for all those.
That's great. See, this is why they need to hear us out.
I know.
They're missing valuable information.
Because there's ways around it. Like it's all about this teamwork, this creativity to get you your dream property. If your dream property is a farm, we have ways of doing that for you.
Absolutely.
Maybe your credit is only allowing for 500,000, but maybe you can lease out some land, get some income. Maybe you can put an accessory dwelling on it, like I was telling you earlier.
Yes, that's true. Maybe
and then
you can
rent it out.
Rent it. Go to the government programming.
And maybe you can apply for that forestry management program. But the other thing that I do know is you have to be registered as a farm to get the farm tax credits as well.
That's correct.
So that should be, I
don't know how much that entails.
Well, that's another podcast.
That's another podcast altogether. But I know that if you are looking at there's again all these different tips and tricks and ways that we can find you the financing that you need. Don't be discouraged. We'll do your research. We'll help you. We're all learning together. There's transparency. There's nothing now that if someone's asking you to pay something up front when you're going to get any kind of financing done with these unique properties, they're not getting you a transparency. I'm not giving it to you.
What do you mean pay for something up front?
Sometimes you'll go to a lender and I've had a few of these come to me.
Right.
Well, they'll say, oh, I went to see this person and they said I can get a loan, but I have to pay, some money up front to secure this loan. Well, you're looking at a private lender and these private lenders, they'll grab you for anything.
Well, and the interest rate's usually high, right?
Yeah, but they'll say, well, I didn't know if I could get a loan. Well, you didn't talk to a mortgage agent, talk to someone who knows what they're doing and has the valuable resources, the lenders that are out there. And it doesn't matter. That's the whole point of going to a mortgage broker, right?
So you can look at all your options.
All options.
And what is required for each option.
Yes.
So you have the full picture.
The full picture.
Don't just jump on the first thing.
No. And the mortgage broker is only going to run that credit report once.
Right. But if you're going to different banks and different mortgage agents, you're going to run the credit report several times. And what happens, Joyce?
Oh, now you're going to get flagged.
And your credit rating goes down, does it not?
It ticks down. We don't want that. One time, get that credit rating done, get that Equifax pulled, and we will use that throughout all of our avenues, searching for the right lender. You know, that's the biggest thing, is like when we have to explain why a credit report was pulled for a client 6 times.
That's ridiculous.
It's like, I wish you just came to me and we could have just kind of done all this for you.
Yeah. See, that's huge. That's huge.
Yeah.
I mean, not everybody knows about that. And maybe that's another part. Geez, we keep coming up with
we should just mark that down. How many times?
I mean, holy smokes, we keep coming up with all these podcast topics.
Yeah. But
but I think, there's a lot of misconception out there about what happens to their credit rating. And I think that is a worthwhile topic in the future, because you don't realize that every time they pull it, it's a downtick. Every time, you're applying for something, it's a downtick.
That's right.
It's huge. And every time you're doing something, it's going to affect your rating, and then you'll never get the loan because it keeps going down.
That's right. When you're trying to unlock a combination lock, you're kind of going forward, and then you're going to go back. And then you're going to go forward again to unlock it, right? So sometimes dealing with lending in unique circumstances is like that. You're finding the first combination, you're going forward, you found your property, you found all these things, you found your lender.
And then a hiccup.
There's a hiccup. So now we've dialed it back a bit. But you don't want to keep dialing it back. You don't want more hits on your name. Make sure, again, going back to our first podcast, don't make big purchases. Don't make, extreme moves like searching your Equifax report through 6 different institutional lenders. Don't do those kind of moves, because we want to tick you forward and get you unlocked into your dream unique property.
And not every lender or mortgage agent will consider that. They'll just pull it and not even think about it.
Yeah.
You know what I mean? At least your team thinks about that, and they say, okay, we're only going to pull this once, and we're only going to pull it when it's proper and the right time.
Right.
You're not going to pull it now and then pull it a month later. I mean, you're affecting the credit rating every time.
Yep. And we don't want to hold on to something for so long. We want to be able to pull it, get you all your answers, and give you the timeline that we need to make the deal work for you.
As long as they have all the information on the ready.
You bet.
Well, can you imagine that, Joyce? 42 minutes have passed already. I mean, we could talk for hours on this, don't you think?
Oh, has it been that long?
Jeez. I know.
I could talk forever.
I know. It's crazy.
We're helping everybody. That's important.
Beverages help, though.
Beverages help.
This cheese is pretty good, though.
Cheese and Fresca.
Yum, yum, yum. Anyway, that brings us to the sip tip of the day. Guess what it is?
What is it? Go for it.
Because they're all very unique properties.
Yeah.
And have a lot of idiosyncrasies with them. Always have a professional in your corner. And I mean that by real estate as well as a mortgage agent. And get them the person that knows about these things. Just to get it, any old real estate agent may not be helpful. They need to know about farms and tiny homes and new builds and waterfronts. Interview them. There's no harm in interviewing these people, right?
Ask questions.
So your sip tip of the day is to get the right professional in your corner from a real estate and a mortgage perspective. I'm Annabella. This is the Sip and Synergy podcast. And
I'm Joyce. Today is November 24th, and we will see you next time.
Woohoo!